Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 13th. And my name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, not a whole lot really, but we did get out of Great Britain an official bank rate. They didn't move rates at all. It kept it at 0.75. We also got main refining rate unchanged for the most part, and the ECB press conference came out and really jawboned about not a whole lot. Then we got this CPI here in the United States, which is Consumer Price Index. Came in at 0.2%, expected to be 0.3%, and Core Consumer Price Index CPI came in at 0.1%, expected to be 0.2%. Both of those slightly lower than expected. Remember, we were talking about yesterday with the manufacturing, the Producer Price Index. And when the producers' prices start to incrementally increase, then they try to pass that increase off to the consumer. Thus, we have inflation. We're not seeing that. We're seeing producer prices lower. We're seeing consumer prices lower. Therefore, we're not really seeing these tariffs come in and really kind of crunch the overall economy like I thought it was going to really start spiking up inflation. We're not really seeing that, which is a little bit bizarre at this point. Also, unemployment claims came in at 204,000, expected to be 210,000. Less people looking for a job means, or at least leads one to believe that people have found jobs. So unemployment claims are people that are looking for a job. And natural gas storages came in at 39 billion cubic feet, expected to be 69 billion cubic feet, expected to be 63 billion cubic feet. 65 billion cubic feet. Totally butchered that number. Natural gas storages, 69 billion cubic feet, expected to be 63 billion cubic feet. All right, and finally we have Bostic speaking, who is an FOMC member as well, later on today. All right, let's talk about the overall markets. Crude oil went up into that 70 handle. I told you guys I don't really see it being able to support that for very long, and that the market would want to come back down to the point of control. I thought that this 50 Fibonacci level would act as more of a support resistance area, but it's looking more like that $70 handle is the real resistance. When we start getting up there, you could even say once we get into that 70, you start seeing resistance up to about 71. That's where we started seeing this market really kind of come off, and people probably deciding, hey, there's a lot of distillates out there. Maybe this is just a real build and not really a drawdown like we saw in the crude oil headline number. All right, then on to gold futures. Gold futures are coming off a little bit, still in the 1200 handle. That is going to be something that the bulls really hold on to. It's a psychological level. As you can see here, there's no support resistances based on that. Maybe if I drew an extension here, you might get something in there, but for the most part, we're not seeing anything other than this 50-day moving average acting as resistance because it coincides with the 38 Fibonacci, all right? So that is a major resistance area. You can see we went up and tested that, and we're unable to breach it. So it looks like gold's coming off. Hey, we got Bitcoin back alive. Somebody hit the whatever it is, the heart machine or whatever, got it moving higher by about almost $200 today. But for the most part, we are stuck in a major tight range with Bitcoin. Don't really see it going anywhere. We got bonds moving higher today. That being because we aren't seeing inflation. The idea is here, if the Fed sees inflation, they got to start increasing interest rates. Well, if we're not seeing inflation, then the mandate really is probably to kind of hold off a little bit. And I think that that's what the bonds are starting to see here is when they get to these extended levels to the downside, the bonds really don't have a whole lot of room to go because I don't think that the Fed should be increasing interest rates at a time like this. The economy is doing pretty good, but we're not seeing that inflation, and it's not so robust that we need to tap the brakes. So all of that being said, I think that the interest rate is about where it should be, and but of course they're probably going to overdo it to the upside, which is what they normally do, is overdo their either increases or decreases in interest rates. VIX, oh, the 13s. The teens were nice, but we're back into the 12 handle. It's close enough to the teens, but you can see it is looking like it is just spiraling down, which is what we would expect with the equities moving higher, as we're seeing this in the Dow Jones and pretty much across the board. Dow Jones up over 160 some odd points and near probably breaching this high here. So I think that Dow is going to get a little bit of a bounce here, maybe test this 50 Fibonacci extension before it maybe, gets a little bit of a pullback. But I think for the most part, we are to the upside. NASDAQ also confirming that, up 90 points today. It maybe looked a little bit toppy coming in here, but today, good economic data coming out is making this market really push even higher. We'll look at it on the daily chart with the E-mini S&Ps here in a second. With the E-mini S&Ps up almost 17 points on the day. Again, just a continuation. Looks like we're going for the all-time highs. This is what I was talking about with the overnight session. Maybe got a little bit short, flushed out. But you can see coming into today's session, really no attempt to flush anybody out until around maybe 30 minutes after the open, when we got that good economic data. That was probably the catalyst to start selling a little bit into that. You were long wanting to take profits, but you can see we sold off and now regaining that momentum to the upside. I think that the economic data we've been getting pretty much is bullish to the upside across the board. Then let's talk about a couple of things that I've done with this BABA trade on. I've had on for approximately like 2 days. I put it on September 11th when we kind of sold off down to these lows. That's when I put that on, bounced off of this Fibonacci 76 area. I decided to add some long deltas with the high implied volatility. No worries about any type of economic or any type of dividends or earnings announcement. So it's a clean month I was able to get into. So I sold those October. I sold 135 puts in there with high implied volatility. You can see volatility came out a little bit. And I got my directional move to the upside. So I was able to cover those today for 40 cents. Tried to start out at 30 cents and ended up bidding up until I got 40 as BABA looked like it was coming off. So I wanted to get out of those rather quickly. So sold them for $1.13, bought them back for 40 cents. Better than the 50% of max profit. It was very close to that yesterday, and I was working a 50-cent bid, but able to get out for a dime better today with the nice little pop we got there in Alibaba. The other thing I'm trying to get out of, yes, I put on this trade yesterday, and this was in Apple. So played this to the upside. If you remember on the up, when we had low implied volatility, I bought some puts, got that directional move. That was nice. Volatility expanded. Both of those things in my favor. Then yesterday I flipped to the long side to get long deltas in Apple because I have high implied volatility. What do? I sell the puts. So when low volatility, directional to the downside, that's when you're buying. When you're upside or what positive deltas in high implied volatility, you sell premium. And that's exactly what I did here with that Apple trade. I sold the October 200 puts in there, and I'm working a bid to get out for, I think, 50 cents. I sold those for like $1.13 or something like that, just slightly above $1, and I'm trying to get back for slightly better than 50% of my max profit, expecting this to try and continue to push higher for me. So right now, close to a 50% of max profit, but I'm squeezing it out just a little bit more than that. If I see this market start to roll over, I might start chasing that a little bit. I cannot pass up the opportunity to have 50% of max profit or just right around there in one day. I'm beating the probabilities. I've got to try and think I need to get out of this rather quickly, okay? So that's what I'm looking at for Apple. Later on today, we're going to be doing a webinar on long calls, the environment we need, the type of volatility. I'm going to go into all of those details in minutia for you. Yes, I've done some webinars on the long calls, but I'm going to be digging deeper into the deltas, or into the Greeks, the delta, the gamma, the theta, and most importantly, the vega when setting up this type of strategy, okay? That is probably one of the most paramount things we're going to discuss today. So follow it. Follow me on Twitter at Wolfman's Blog, or go to protraderstrategies.com and sign up for my webinar today. It's going to be a really good one. All right. So if you can't take that, take it easy.